Hello! Today we are going to cover the most important topic for anyone who enters trading: why 90% of beginners lose their deposits literally within the first few days. I will show you 5 main mistakes that almost all beginners traders make in quick trading on pocket option. If you understand these mistakes and avoid repeating them, you can already be among the 10% who actually make money. So get comfortable, grab some tea or coffee. This video will be informative. Let's begin. Mistake number 1 is trading without a strategy, or simply trading randomly. For example, a beginner sees a red candle and thinks, the candle is red, I'll place a downward trade, and just opens a sell order. At the same time, they don't analyze the situation across different time frames. For example, if we look at the 1-hour chart, we can clearly see an overall upward trend. Yes, there may be a small downward impulse at the moment, but if we look at the hourly history, the trend is upward. A beginner does not analyze this and simply sees a long red candle and decides to sell. This is not how it should be. You need to analyze the market across different time frames and fully understand the currency pair you have chosen. If there is no system, there will be no stable income. When you trade without a system, it turns into a casino. A strategy includes a clear entry signal, confirmation, time frame selection, and risk management. Without a strategy, your deposit will be lost. This is important to understand. Let's move to mistake number 2. Opening trades based on a single candle. Beginners often make decisions based on one large candle. If it goes up, they think it is a trend, but a candle can be market noise, news, or a correction. For example, just because there is a large bearish candle here does not mean the trend is bearish. We already saw on the hourly time frame that the trend is upward. What we see now is a correction, essentially a false breakout. If before this market had also been moving downward with large or medium red candle, the opening a sell trade would make more sense. As you can see, the market is now moving upward and stabilizing. I will open a buy order. We wait for 1 minute. Overall, this is an impulse. Now I will check the second based frame and select 5 seconds. Do you see these jumps? This indicates that there is an impulse in market. This is an important point. Now let's look at the 15-second time frame. This gives us market dynamics. It's important to understand market dynamics. You never act randomly, you prepare before opening an order. This is a very important point. I am almost sure that this candle will reverse, because you can see how it keeps getting shorter and leaves a long wick. Overall, I believe the situation will turn in our favor, and everything indicates that. As you can see, we analyzed the situation and did not rely solely on a single candle. We looked at multiple candles, the wicks they left, and the impulsive movement when we opened the order. We checked second base time frame and saw that there was market momentum. We performed preliminary analysis and did not open a trade based on just one candle. In quick trading, one of the most common mistakes is opening a trade based on a single candle. You need to look at levels, check for pullbacks, and now can also use indicators. It is also important to understand the trend direction and whether your trade aligns with it. We determined the trend using the hourly time frame and saw that it was bullish. We have now covered 2 mistakes. Let's move on to mistake number 3. I want to highlight martingale doubling. This is one of the main reasons why almost everyone loses money. For example, you lose $1, then you place $2. You lose $2, then you place 4. Step by step, this leads what? To losing your entire deposit. This is a very dangerous approach and should never be used. After 5 or 6 steps, your deposit will simply disappear. You increase your order size exponentially without any analysis or understanding of what you are doing and just drain your account. Martingale in fast trading is a direct path to losing your deposit. The problem with the method is that you increase risk but not accuracy. One losing streak can erase a week of profits. The market can move against you for dozens of minutes. It is better to perform quality analysis before entering a trade rather than trying to recover losses by doubling. Do not focus on quantity. 2 or 3 confident entries are better than 20 chaotic action in markets. Chaotic action will inevitably lead to losing your deposit, while 2 or 3 confident trades will be profitably help you earn steadily in the long term. This is important. This is why we come to trading. Now let's move on to mistake number 4. Entering the market when it is chaotic. Beginners enter trades at any time in the morning, at night, when the market is jumping. 70% of losses occur exactly when the market conditions are unsuitable, when trading is not advisable, especially during the release of important news. Any significant economic, global, or political news has a strong impact on the market. During major news releases, the market can abruptly reverse in the wrong direction. Before opening a trade, you must analyze the news. This is very important because major news creates extreme market volatility. The price moves chaotically up and down, and we do not need that. Another point is that you should not rely on sharp impulses without structure. This actually brings us back to the previous rule. Do not rely on a single candle. If you see impulses that you cannot analyze or explain, you should not trade them. It is better to wait 10 minutes for a good market situation than to jump into chaos. This is important. Now let's move on to mistake number 5. Incorrect risk management. There is not much to explain here. Beginners place trades worth 30% or even 50% of their deposit, which is a disaster. When someone does this, they are clearly chasing big money and fast money. I will keep repeating, that is not how trading works. Trading starts with analysis, then comes the trade entry. The basic rule is 2-3% of your deposit per trade, with a maximum of 5%, and no more than 3 trades in one direction. If you make 10% profit in a day, I recommend setting a stop limit and stopping. You're already in profit. Do not chase fast money. The market is not going anywhere. The main goal is to preserve your balance. Beginners tend to want everything quickly and want to make big money immediately, but it does not work that way. It is better to make 10% profit in a day than to lose everything in 1 hour. Losing a deposit is much easier than building stable, profitable trading based on an analysis and a strategic approach. This is very important, and I will keep repeating it. Now, to conclude this video, I will open one more trade as an example. Let it be the Swiss franc against the Japanese yen. We start with the hourly time frame and look the overall picture. There was a decline, followed by an upward trend. After such candles, the market often reverses. The Those who focus on a single candle, as I mentioned in the first mistake, and think the market will continue downward, are wrong. You cannot analyze the market based on one candle. The price moved up, then there were strong breakouts, and now we see a corrective phase. This is important. Let's check the second base time frame to understand the impulse. There is an upward tendency. You can see consecutive candles with long wicks. So I will open a buy trade. Now let's look at the 1 minute time frame. I want to emphasize again, 2-3% per trade, maximum 5. Do not rush. Approach trading from a strategic perspective. This is not a casino and not a money button. It is analytical work. 70% of the time you should be analyzing the market and studying the news, not rushing into trades. A few profitable trades are far better than losing your entire deposit. Speed is not your ally. Your allies are analysis, a clear mind, and a rational strategic approach. Only then can trading become a stable source of income. I will keep repeating this. That is why haste is your enemy and a calm mindset is your best friend. As you can see, two profitable trades in 10 minutes. And we were not rushing, we analyzed different time frames, levels, and candle behavior. In conclusion, if you eliminate at least half of these mistakes, your trading results will improve significantly. But it is better to eliminate all of them. I will continue to return to other mistakes that traders make. I am here to help you earn consistently and learn to think strategically in trading. This is very important because this is not a casino. It can become a stable source of income if you approach it correctly. I'm glad you watched this video. Stay tuned for the next videos where we will cover new trading topics, the platform, different tools, indicators, and trading with and without indicators. I hope you trade profitably and consistently.